Mr. Mallya, Chairman of the Indian Banks Association and also Chairman of Bank of Baroda. Mr. Mallya, going forward, what do you believe the outlook on the interest rate picture is to begin with?
No, I think the message is very clear. The RBI has been consistent in its approach. They say that there are inflationary pressures which continue even as of now. For one simple reason that the crude oil prices have not been coming down. In fact, it has risen by almost about $15 to $19 in the last 3-4 months. So given the scenario, I think the fear of that the inflation still persists, and therefore I think RBI has been very clear in giving a message that they would like to ensure that the inflationary pressures come down before any rate cuts are announced. Therefore, I think we need to wait for some more time before any rate cuts are made by the RBI.
Sure, but Mr. Mallya, the markets, the banks really, you guys got much more than you were all asking for in terms of the CRR cut that we saw last Friday. You got a 75 basis point cut against the expectation that you'd see 50 basis points today. Now, were you somewhere half expecting that the Reserve Bank of India may possibly have cut CRR further today, maybe by at least 25 basis points, because despite the CRR cut that we saw last Friday, the deficit in the system is running at, I think, if I quote yesterday's number, about 124,000 crores. Were you half expecting that CRR would also have been tinkered with?
No, we were not expecting immediately a further CRR cut, because last week itself we have seen the action from the RBI. And it was a huge cut, 75 basis points as against the expected 50 basis points. Apart from the fact that it injected certain liquidity into the system, almost about 48,000 crores, the fact which we need to keep in mind is that with the government spending taking place maybe by end of the month or early April, the liquidity situation overall is likely to improve. I think therefore the assessment of the RBI could be that liquidity is overall reasonable, and therefore there is no need to cut the CRR at this point in time further.
Mr. Mallya, wanted to get in your view as to now, on the back of this move, where you see credit growth stabilizing.
See, as far as the overall credit growth for the current year, the assessment is in the region of around 16 to 17%. We have seen a slight improvement in the credit offtake and the credit demand in the last 1 month or so, but then it is too early to say that whether it would continue at that level or may increase substantially beyond that. So therefore, at this point in time, uncertainty prevails as far as the overall investment climate is concerned. Perhaps tomorrow's budget would be a pointer as to how exactly the whole thing will pan out as far as the next financial year is concerned.
With respect to, going about on the inflation trajectory, we do know that yesterday we had the WPI numbers at 6.95%. And, given that the liquidity in the system will continue to remain tight, do you think that tomorrow, perhaps when there is more clarity on fiscal consolidation by the RBI, that a rate cut in April would perhaps be inevitable?
No, it is too difficult to project at this point in time, because as we have been discussing in the panel, perhaps the RBI would still continue to keep a very close watch as far as the inflationary pressures are concerned. I think that would be paramount in terms of a rate cut happening in the month of April. So therefore again, I think the message is clear that we have seen the peak as far as the interest rate cycle is concerned. So therefore from here onwards, one could look at with optimism the interest rate coming down, but then the timing, I think it is too difficult to predict whether it would happen in the month of April or maybe subsequently in the first quarter. I think at this point in time it is too difficult to predict.
There is a danger in the long run that we will have negative interest rates and that the saving rates will be impacted in the long run. Would you agree? Is this a worry at all?
No, I think as of now, apart from the saving rate, by and large, the rate of interest which is offered on the term deposits, I think takes care of the inflation and the real interest rates. And I think therefore the interest rates on the deposits have remained slightly on a higher side, taking care of that. So as far as the saving bank is concerned, I think at this point in time, the rates will continue at the levels at which they have been ruling.